Today, we'll be flying over a company that has been going through a lot of turbulence since the beginning of the pandemic. So, we'll be doing a full stock analysis on the business Air Canada with the ticker AC. As always, after checking out what is their business model, so how are they able to generate their income, we'll be making a quick fundamental analysis followed by price prediction to determine what is the true intrinsic value of this company. Founded in 1937, Air Canada is currently the largest flag carriers in Canada by volume and by number of passengers. Indeed, with major hubs in the country such as the Pearson International Airport, the Montreal Trudeau International Airport, and the Vancouver International Airport. The company flew over 44 million people during 2023 only. This is way above their average that they've seen during the pandemic between 2020 and 2021, where they flew on average about 13 million people during these years. But at the same time, it is still far from their pre-pandemic level, where in 2019, they flew over 50 million customers. As any big airliners, we've seen that the company has been truly hit by the pandemic that has made them lost a ton of value. Add to this, many investors were concerned about this company during the pandemic, where we've seen that the government of Canada in October 2021 has bought a certain stake of this company. Indeed, we've seen that the Canadian government has bought a 6.4% stake in the company to help them and support them financially to mitigate the impacts from the COVID-19 pandemic. As an investor, it is also crucial to understand that these types of businesses are considered as acting in a cyclical segment. This means that they'll be moving depending on the economic ups and downs. Despite that, we can notice that after the massive downtrend that it has seen in 2020 because of the pandemic, the company's value hasn't been able to pierce through the $25 per share ceiling. This makes that the company's value is still far from its all-time high, even if people are restarting to take planes after years of lockdown. Nevertheless, we've seen that the company has still been able to grow their total revenue over the past 4 years quite importantly, but one of the biggest concerns for the investors that has been reflected through their past earnings results that haven't been able to perform as greatly as the analysts were predicting is their booming operating expenses that have the impact to reduce the total profit of this company. Indeed, North American airliners are now struggling with higher costs as they add flights and operate older, less fuel-efficient planes with shortage of new aircraft, which makes it harder for these types of companies to capitalize on strong travel demand. In any case, the more worrying point about Air Canada expenses at the moment is concerning the explosion of the oil price lately. Indeed, when we know that a Boeing 747 uses approximately 4 liters of fuel every second, which means that it burns about 150,000 liters of fuel over the course of a 10-hour flight, well, we can understand that a company like Air Canada is at the mercy of crude oil price variation that has been going through the roof over the past couple of months. Nevertheless, Air Canada is still Canada's largest airliner, where it provides direct service to 6 continents. Add to this, it is the only international network carrier in North America to receive a 4-star ranking from Skytrax. And so, as long as people will want to travel across the globe to visit different places, a company like Air Canada will continue to be relevant over the next couple of years. Add to this, it is important to note that this company has an impressive fleet of airplanes such as the Airbus A330, the Boeing 777, and the Boeing 787 Dreamliner, which can make any big airliners jealous. On their side, the analysts of TipRanks are giving a price target for Air Canada of $28.50, which will represent a massive potential of upside of over 50% compared to their current price. So now, let's see what the different valuation metrics are telling us about the true intrinsic value of Air Canada. The first thing we can notice is the fact that Air Canada currently worth only about $6 billion with a super low price to earnings ratio of about 3. Unfortunately for the investors, we can see that in terms of the profitability of the company, they have some super low profit and operating margin. In terms of their total revenue generated over the last 12 months, we can see that they've generated over $22 billion, which represent close to to 4 times their total valuation, and this also represents a growth year over year in their revenue of about 7%. Now, to determine what is the volatility of this company, we'll be using as always the beta on a 5 years period. And so with a beta of over 2, we can see that this company is way more volatile than the overall market, where the stock market has been returning about 22% over the last 52 weeks, and where this company has lost over 17% of its total value. Nevertheless, one of the great points about Air Canada at the moment is their total revenue growth over the last 4 years, despite the pandemic, where we've seen that they've only been generating about $6 and $5 billion of revenue during these 2 years. And we can also see a great progression in terms of their total net income that was in the negative even in 2022, but in 2023 we've seen that it has come back in the positive. Now, to determine what is the true intrinsic value of Air Canada, we'll be using as always many different evaluation models, starting out with the Peeler-Lynch valuation model, which is a simple formula where you add the future growth of the earnings per share with the dividend yield and that you divide with the price to earning ratio. And so despite the fact that the company isn't giving any dividends, and with this hypothesis, we can see that the stock would currently be way undervalued right now. Unfortunately, since it isn't giving any dividend, we can see that we won't be able to use our dividend discounted model. But now with our third model, which is our discounted cash flow model, as always, we'll start by finding what is the cost of debt, the cost of equity, and the cost of debt and equity to find what is our weighted average cost of capital. And so with this weighted average cost of capital, we'll be able to discount our future free cash flow, which will give us our intrinsic value of $48.65, which would actually represent a potential upside of over 164%. And finally, with the two last models, which are the Graham's original value formula and the Graham's revised value formula, we can see that the intrinsic value would show that the company would also be quite undervalued right now. As you've been able to see in this video, after seeing a lot of turbulence in their valuation during the pandemic, Air Canada value at the moment would currently be quite undervalued according to the different financial metrics and valuation models. And so even if the financial metrics would be showing that the company's value would currently be quite undervalued, it is important to note as an investor that this company will be acting as a cyclical company. Add to this, we've been able to see that over the past 4 years, the company's value hasn't been able to gain some true momentum and keep it in the long term, while the stock market on its side has been shattering its all-time high. For this particular reason, I would be pretty careful about investing in this type of company at the moment, and I would personally be waiting for more positive news before to start investing in it. Nevertheless, I still believe that it has great potential for capital appreciation in the long term, especially for investors that have a long-term horizon. It is why personally I keep Air Canada on my watch list, where I keep an eye on it every single month. Nevertheless, on your side, if you're looking to discover other great companies that are currently quite undervalued right now on this crazy market, well, check out the video that's gonna be right over here, and I will see you soon. Peace!